All right, here's another important concept check for us. When it comes to risk management, you have two principal lines of defense. The first is position sizing, and the second is stop loss. Now, in this video, we're going to talk about position sizing, and in other videos, we'll spend some time talking about stop loss placement and techniques. But since risk is correlated to the position size and the distance to stop loss, where you place your stop loss is, we want to be technically sound, but it is, in my opinion, not as important as the exposure to the size of the position you want to create. So position sizing is going to be our very first line of defense. And I've got a pretty good example for you again here on position sizing. We got some basic rules for you to consider. As a general rule, when it comes to stock trading, we want to use no more than, say, 5 to 10% of your total capital. A position rule could be, maximum risk of 1% of your account. So again, let's say you have a $10,000 trading account, you really should only risk 1%, about $100. If you've got a $100,000 trading account, well, that same 1% risk could expose you to $1,000. So again, position sizing for your own personal pain threshold, as well as your asset allocation rules and your position sizing rules for your account, is going to help keep you disciplined and unemotional. When it comes to trading options, there's a little bit of leverage in there. So again, you should position size according to your personal risk tolerance. Never buy more than 1 to 4% of your account balance in options. And again, typically we want to stick to that same 1 to 2% maximum risk tolerance per trade. Now, when it comes to simple stock, position sizing, I want to give you an example here, just a real quick example using a stock position on RSG. In a previous video, we talked about entry, triggers, and stops, and using some of the criteria here. And I wanted to show you how important the position sizing is to risk. Now, it's easy to look at the reward and to get excited about, oh yeah, I could make $435 if I buy 100 shares. But are you willing to stomach the $200 drawdown in case you're wrong? Well, what if you're feeling a little bit greedy, or you got a slightly bigger account size, or a massively bigger account size? Let's say you bought 1,000 shares of the same stock. You have to consider how much asset allocation that would take. I'm going to go ahead and hit confirm and send here so you can see, well, that would require a $45,000 margin. So that may or may not be appropriate for your account size. But again, if you look at the risk profile here, as we look at that, let me send that back into the Analyze tab there. Make sure we've got that in there. Okay. Well, if you bought 1,000 shares of that stock at these prices, well, that's going to expose you to $2,000, $2,020 risk. Well, that may or may not be appropriate for your personality, your goals, and your strategies. So again, maybe you pull that back to 500 shares, and that might be more realistic for you. Again, that would take about half as much in margin, and again, exposure to about $1,000 risk. Now, if that's not appropriate for your account size, you realize you could buy as little as 1 share. You could buy 1 share. Now it exposes you to just $2 risk. And this is great if you're teaching kids how to trade, or you're just starting out with a small amount. You're not going to make a lot of money, but you're not going to lose a lot of money, and you can start out small. Well, okay, what if you bought, 50 shares? Or 100, 10 shares, whatever's appropriate for your account size. You could, risk 20 to make 43. That's a great thing for a beginning trader to do. Start small. Again, position size according to your stomach, to your risk tolerance. You don't want to exceed pain thresholds, and if you're willing to risk $100 in exchange for a potential payout of $200 or so, then that's what is most important. Where you place your stop loss is important, but position sizing is vital. And it's probably the number one cardinal sin I've seen traders make over the years, is over position sizing. Everybody wants to get rich quick, and the risk is that you over position size, you end up causing damage to your account. So as a good hard fast rule, always position size to your risk tolerance. Do not position size to reward, position size to risk tolerance, and follow the step system rules religiously. They will protect you.